Hello.
Hello.
Hey.
Hey,
Hey.
Hey.
Okay. So, um, Warner, I'm sending you the Stock Savvy Basic Guide from Rick Warner.
okay.
Um, it's just something I've found is pretty basic EOD stuff.
Okay. Well, I'm Christian Wilkins. My friends call me Kerr. Um, I got into trading in 2019, about halfway through the year. So I've been trading for about 2.5 years now. Um, yeah, I originally got into it just like watching YouTube videos and stuff, and then eventually started following people that do it for a living, basically. And yeah, that's where I'm at.
Yep. I'm Byron Wilkins, Her's brother. Um, I started in 2020. Uh, I started with Robinhood, and then Christian told me a little bit about some of his adventures, some of his excursions, and then um, again got taught by people that do it for a living. So I've kind of dabbled with that and tried to understand it on my own terms after that. What about you, Warner?
Well, I'm Warner Wilkins, WW, yeah, buddy. And I'm Byron and Kerr's little brother. I'm the baby of the family. Just got off my mission and I'm looking to start trying trading in general now, Anno Domini 2023. um, yeah, I messed around with Robinhood a little bit before the mission, but not enough for me to consider any amount of significant experience. But
Yeah. So kind of the point of today is kind of just to share lessons we've learned and our experiences and maybe bring Warner up to speed a little bit faster. Um, so yeah, what do you guys want to talk about first?
Well, I generally like to talk about different platforms. I think that's kind of where you need to start. Is you need to get an account on some kind of a platform. Um, I originally started with Robinhood because I don't remember, I saw like an ad for it or something that it was freed commission trading. Um, so I just downloaded the app on my phone and made an account there, and it works just fine. But um, I prefer some of the other ones because you're able to use different tools in the other ones. Robinhood kind of just gives you like a line to follow. I guess it's been a while since I've been on Robinhood, so I don't really know if they've upped it or
Like
not. But
they have
um,
included bars now and moving
okay,
averages.
well, there you go. So it sounds like they've upped their arsenal a little bit, their toolbox.
Yep.
But some of the ones I've heard about, I've heard about Webull. I've never used Webull. Robinhood, TD Ameritrade has I think a couple different platforms, but the one I use is Thinkorswim, and I know that one's commission free trading. Another one we've used was TradeStation.
Yep.
Um, but really, any of them I think they're essentially the same from my experiences. Just whatever interface you prefer.
Yeah. Along those lines, I found a I forget what they call them. They let you trade somebody else's account.
Okay,
Um,
prop trading,
prop
proposition
trading.
trading.
That's the word. Thank you. So I found a little prop trading company that I've tried, and they use 8cap as a platform. That's what it's called. It's a little bit more bare bones, but
Right.
um, but same data basically.
Cool. So what do you? I guess we haven't even talked about like are we day traders or like do you just buy it and forget or what's what's the mission, what's the goal, and how do you go about it?
Yeah. Warner, where do you want to start?
um, I'm wanting to start with end of day trading. Sounds like it's involved enough that I'll learn more. I'll learn faster, but it's also not quite so involved to where I'll be overwhelmed. So
Yeah. Okay. I think that's a good idea. Let's start with EOD. So there's several, I don't know, categories of trading. Day trading, where you're trading within the day, you open and close positions within one day. EOD, end of day, is usually, it's also called swing trading, but you buy and sell over several days. And then there's like the buy and hold strategy, which exactly that, buy and hold for a longer period of time. So you kind of got short, medium, and long. Yeah, anything to add, Kerr?
Um, I, so we use the term like end of day because we get that from Rick Warner that we've done a lot of learning from. And his whole take on end of day trading was that it would be for people like busy in a profession or something. They could spend 10 minutes at the end of a day to look at it and calculate their next positions or whatever. So end of day is really meant to be very little time input. Once you're up to speed on how to do it, it should be very little time input, and it should be something that you can do while you have another very engaging profession or what have you. And then day trading, just a little caveat on that is a pattern day trader rule. That it's if you're trading on a margin account, you're not allowed to make more than 3 day trades, which is opening and closing a position within the same business day, within a 5-day trading period, which is basically a week, until you have $25,000 in that account. So that's a pattern day trader rule. So most people who day trade generally have $25,000 cash that they can trade with. So if that determines what boat you fit in, if you're under 25,000, it's probably easier to do the end of day until you grow that wealth to 25,000.
Yeah, good point.
I'm not saying that's what I follow, but that's probably the better idea.
I was unaware of that, so that actually helps me out a lot.
Yeah. Yeah, and for somebody starting, that makes a lot of sense to start with EOD.
Okay.
Yeah, so let's start with EOD. What do you already know about it, Warner? What do you want to know about it?
Um, well, I was under the impression that EOD meant the end of day meant like at the end of the trading day, like everything's closed and then you're making the decision. But now, so is that the case, or is it just like end of day, like you end whatever you were doing the rest of the day, and then you go ahead and do it, or kind of both?
The idea is that you can look at things once the market is closed that day and make decisions once everything's closed for the day.
Right.
Okay.
So the last, I don't know, 15 or so minutes of the day, you can kind of get a snapshot of what the day has done already, make a decision, and then come back to it a couple days later.
And
Okay.
I think it was also designed that you could make a decision after the market's closed, put in the order, and then it would be filled the next morning
Right.
when the market opens. So you don't necessarily have to put in time while the market is open ever.
Right.
Okay. Yeah. So, what platform do you guys use?
I've used Thinkorswim, TradeStation, and 8cap. Right now, I'm trading in the 8cap account, is what I'm doing.
Okay.
And I've mostly just used Thinkorswim. I started with Robinhood, went to Thinkorswim, then moved my account over to TradeStation, and then moved back to Thinkorswim. And that's just the account that I'm used to. I know where all the buttons are now, so they're all the same buttons, but they're in different places essentially on the different platforms. So that's just what I'm used to. So
Yeah.
that's what I use.
Okay.
If you want, let's see if I can screen share.
Yeah.
And Okay. What are you guys seeing?
It says
We're
Byron
seeing
Wilkins has started screen
started
sharing.
sharing.
Is
Yeah,
it loading?
yeah, it's still loading.
Yeah. Eh. Okay, maybe we're gonna be waiting.
I guess here's another caveat too, is that I trade on my phone. I don't ever trade on my computer.
Yeah, okay. And I hardly ever trade on my phone, so that's a
Yeah.
little bit different.
Yep.
Let's see.
You see,
What are you guys seeing now?
I
It says
see
8-cap demo.
Okay. Yep. Can you see my
little
cursor at
candle.
all?
You can.
Okay, cool. So this is what I have set up, and this is more of my day trading, so you can kind of disregard most of this. But so over here on the right is each candle is a day. And basic candle anatomy real quick. This is the stock market rise and fall over several days. Each one of these bars is a day. Green means it went up, red means it went down. The body of the candle is where it started and where it ended. So like on a green candle, it started low and it closed high. On a red candle, it started high and closed low. And these little wicks and tails are the price fluctuations at the highest and the lowest point. Um, so like this one right here, it opened here and closed just below that, but it ran up and down and back somewhere throughout that day. So that's a little candle anatomy real quick there. You can kind of see what it's done over the past couple of days here. Let's see, what else can we say? I have these lines are called moving averages, and they just take the close of the last so many candles. So this blue one is the last 8 days. It'll take the last 8 days and then plot a point. So it kind of trails what is doing. And the purple one is a 15, and I have a red one as a 50. So they kind of average out the last X amount of days and gives you a lagging indicator of what the stock
A
has been
trend.
doing.
Is it
Yeah.
moving up or is it moving down?
Right.
And then you can see how they compare to each other. Is it moving up or down in the shorter term or the longer term?
Right. So I don't know. What do you see when you look at that, Warner?
When I look at the chart on the
Right.
right,
Yeah.
Any of the charts, and what questions, like, is it overwhelming? What questions would you ask about, like,
Right.
any of it?
I don't know. I don't know what question I would ask.
I-
It is. It's kind of the point where like I don't know enough to ask a question.
Okay.
Okay. So maybe we need to back up a little bit.
Well, I mean, you could even talk about like do you understand that, like, you're buying a piece of this company,
Right.
and
Right.
and then as people see the company rise and fall in value, so you could buy a piece, you could buy 5 pieces for, $60 or whatever, and then as the company goes up in value, or as people see more value in the company, you could sell those 5 that you bought for $60 a piece. You could sell those 5 pieces for $65 a piece later on. And that's essentially how you make the money in the stock market, is that you're basically buying the potential of the company going up,
Right.
or in value. And so you can see these indicators. So like the lines that Byron has painted on there show like trends. Like right now it looks like, generally speaking, it's going up in value, right? And we can see that just a few days ago, looks like a week and a half ago, it was down at like 62.80, and now it's up at almost $72. You see that, Warner? You following all of that?
Yeah.
And so that's what we're looking at. And so you can see, like, if you're doing end of day stuff, you'll probably be looking a lot at the daily chart, because you don't really care what happens in the middle of the day. You just really care
Right.
what happens at the end of the day. And Byron, it looks
Right.
like, has some of these, I don't know, 5 minute in the middle and a 1 minute on the
Yeah.
left.
1 minute.
And so if he's doing day trading, he might care that, it's going to go up and down in the middle of the day. But you can see on the daily right now, from open to close, it hasn't really moved. So
Yeah.
but on the far left, you can see that it's moved a lot in the last, I don't know what that would be, an hour or 30 minutes or something.
Right. Yeah.
And so in the last 30 minutes, you could have made, $1 a share, $1 a piece of that company.
Yeah.
Whereas if you just bought it at the beginning of the day until now, it hasn't gone anywhere. It's the same value. And so that's, now you can start to see, like, the difference. Like, maybe within the day, you might have a chance to make money. But then if you're going end of day, it's a different chance. On these charts, the yearly charts, really. And generally speaking, the stock market grows enough for people to make money off of that. And so generally speaking, the longer you wait, the less risk there is involved, because you have more data to go off of. So that's, I don't know, some of the pros and cons of the different charts you're looking at.
Right.
So yeah, go ahead.
No, I was going to ask, like, what if you were to try and make a trade today, what would you want to know, Warner?
I remember, because I did learn a little bit of Rick Warner before the mission. I watched some of his end of day trading videos, and I remember that there were a bunch of little indicators that you can follow, a bunch of little patterns. If you follow that pattern, then you can kind of predict which direction the stock is going to move. So, how do I use those patterns effectively?
That's a good question. Do you remember what kind of patterns he was talking about? Was he talking about candles or moving averages, anything like that?
I think the candle ones are the ones I'm thinking of.
Okay.
I think with end of day stuff, I think you just have to meet for him, it's just a checklist. Like,
Yeah.
did the moving averages cross the upside or the downside? And is the MACD following? And is the candle closing above or below the moving averages? I think Byron, I was gonna say he's got it printed out.
Yeah, I've got this little checklist printed out. So, like, here's buying long, and then here's selling short. And we can get into the differences there in a minute if you want. And that's in the little file I sent you, Warner. With that
little checklist.
Yeah.
So if I just follow the checklist, I'll make money.
So some of the things he doesn't really have the candle patterns on this checklist because they're a little bit different. The candle checklist, the candle patterns used a little bit more in day trading.
Okay.
But the EOD checklist is a little bit more of like fundamentals and kind of just the potential of that stock.
Okay.
So real quick, I'll just read through the checklist and then we can kind of break it down from there. Does that sound good?
Yeah.
So so a simple buy long checklist. He has market trend is up, closes above the 15 moving average. You have a moving average crossover to the upside. You have a MACD crossover to the upside. You have an increase in volume trend over the last 30 days. You got to check the earnings announcement date. He says don't buy before 10 a.m. Set a trailing stop loss, and then put an alert on it so you know if you're not checking it every day. So I guess start with market trend. Um, Market trend, according to Rick Warner, is determined off of the moving averages. So the 15 or the 8, the 15, and the 50 here. I use those as my moving average trend indicator. And a trend, an uptrend is when the 8 is over the 15 over the 50. So like if you can still see the AMD here, it's
Yeah.
moving that direction, but it hasn't, the moving averages haven't crossed over
And if you go
completely yet.
back 2.5 weeks, you do have that, and you can see.
Right here. Is that what you're talking?
Yeah. Well,
Yeah.
yeah. So I mean, you can see the different, like you can see the momentum swings as the moving averages cross over. You can see how the candlesticks are following that.
Yeah. So the 8 and the 15 and the 50 here. The 50 was moving down, right? And this has swung it, the 50, to move back up. So now the 50 is even on an upslope. When this crosses over, might be a potential buy opportunity.
And I also think Rick Warner talks about the market trend. I think he actually goes into like the Dow Jones index and the
Oh, yeah, that's
Nasdaq
right.
and the S&P
That's a good
to look at
correction.
those moving averages on the daily charts.
That's a good correction. I've been looking here on AMD. Um, but the market would be something like the S&P 500. Um, I don't think they have that on this.
Yeah, here, let me pull it up on my phone. So the Dow Jones index is done by it's indicator. See if it focuses. So there you go. That's mine. And then you can see all the moving averages on it as well. But I also have just straight lines painted on mine um, that candles frequently open or close at. There you go. Something like that.
Okay, sorry. Let's see if this works. Having trouble.
Is it your program or is it your computer that struggles loading it?
My computer's getting old,
Okay.
so it's just having trouble running all the Zoom call and the stock trading all at the same time.
Right.
So that's an
Um,
investment another time.
yeah.
Yeah. Let's see.
I know Dad has like multiple screens for his Warner.
Yeah.
That's, I mean, I don't know. It's kind of almost a stereotype in the day trading world to have a big setup like that.
Yeah.
But I don't think it's necessary. Maybe it's up to your full time gig, but if you're just doing it as a part time, or especially if you're only doing it EOD end of day,
Yeah.
there's no need for that. You could easily do it on a phone or just on your computer screen. Um, yeah,
Yeah.
there's no need for that if that's what you're doing. To what?
Okay. That makes things easier because I built my computer and I have a Linux distribution as the operating system, and
Yeah.
figuring out how to put on all of the different programs so that Thinkorswim works has been insane. And
Yeah.
so if I can just download an app and that's just as good as using the computer, at least for the start, then that makes things way easier for me.
Yeah, and I think especially for the newer generation, it's a lot easier because we grew up on phones, right? Um, I don't
Right.
think I don't think Rick Warner would necessarily suggest using a phone screen, but it's just not the same generation. It's not what he's used to. He's more used to a computer screen. So
Yeah.
Right.
But even Rick Warner, I mean, he'll show pictures of like his first laptop, and it's all brick.
right, and and in his training videos, he originally had like where you had to call to set up an account a brokerage
calls
account.
anymore.
Yeah, so now it's just you can jump on your phone and make an account. So little things, times have changed, and you know that works for him. But I think phones would work just fine for people who are used to being on phones.
Yeah.
Okay.
So Zoom is telling me I got 6.5 minutes left of this meeting.
Okay.
So I
Yeah,
think
more
we're in this little buffer zone too, but do you guys want to finish out this little checklist? And then
Yeah.
we'll pick up where we left
Yeah.
off. Sure.
Yeah. So here we're looking at the S&P, which is just the top 500 companies make it
Yeah.
to this group. So it's essentially a mutual fund, but it's just kind of an indicator of how the top 500 companies are doing altogether, right? So we can see how these moving averages go back and forth, and they switch orders.
Yeah.
Like from top to bottom, like right where the mouse is, you got little to big. So you got the 8, then the 15, then the 50. Then when it's going down, then you got the 50 on top, then the 15, then the 8, going
Right.
from top to bottom. So that just gives you an indication of which way it's moving. And then Rick Warner also says he refers to it as a train wreck. Like if they're not in order from smallest to biggest or from biggest to smallest on the moving averages, then he said don't even mess with it. So for what it's worth,
because there's a lot of fluctuation currently.
Because it's a momentum change. Yeah.
Okay.
Yeah. Like, I don't know, you see this happening here, but you also see this here where like this is the trend going down, right? You have a little crossover, the 50s, or the moving averages are kind of lined out here. But if you're just looking at the 8, it looks like it might be crossing back up. You just don't know.
Right.
But it's more predictable when it's in this trend.
So right now today it looks like it's not really like it's kind of in this train wreck. So you got
Right.
the 8, then the 50, then the 15.
Right.
So
Which,
it might keep going that way, or it might come back down the other way, or it might just sit in this bubble and go back and forth for a month or so, you know?
right.
So that's check the market conditions.
Right. That's market conditions. And then for the sake of simplicity, I'm just going to leave this loaded for the rest of it. But like his next checkbox is closing above the 15 moving average. So he's talking about the candle here, closing above the 15 moving average. And I mean, these candles are above the 15, but it just got to check all the boxes, you know?
Right.
A little side note that I wrote in was to look out for the support and resistance. So real quick, support and resistance is moving averages are a support and resistance. It's just a support when it's beneath the candle, and it's resistance when it's above the candle. So like here, when we're looking today, the moving averages are a support line. If they come back down, it's gonna show tendencies to resist going through that. And coming up, it's going to show tendencies of resisting going through that. Like you see this on the 50 coming up through here. It doesn't quite jump through it, but it melds a little bit more up to this level, if that makes sense. So just watching
you
that.
can also have straight lines be support to resistance. So about halfway across the screen, you can see where it comes down to your left, Byron. Yeah, right there.
Right there.
You could paint a straight line across there and say that's a support. So it just has a tendency to not cross the support or not sustain across. It doesn't sustain a move across that line. So you can have straight lines. Yeah, exactly, just like that. And the more often that the candles touch that line without crossing it, the stronger that support or that resistance.
Yeah. His next little checkbox is a moving average crossover to the upside, which is that exactly, is it's crossing the side.
Right. You're just waiting for the 15 to cross the 50 as well.
Right. Which kind of goes along with a market trend. Because we're looking at the market, it will be the same, but on the stock individually, it might be a little bit different. And then down here, the next one is a MACD. So this box down here is the MACD, and it's a momentum indicator.
It's very similar to your 8 and 15 moving averages. In the sense that you're looking for the same thing, a crossover to the upside.
Yeah. And yeah, it's these little lines are moving averages is really what they are. But it just shows momentum. And this one will paint it for me where it's like it's diverging, and then it's converging, and it kind of paints it in a lighter color. So the histogram here is just showing you the gap between the two. And that's, yeah, really you just want to look at the lines and see that they're crossing to the upside. Kind of like there's a crossover in here coming up, crossover to the downside here. So that's the MACD, and you're really just looking at those crossovers. And then a volume trend over the past 30 days. You just want to see that the volume trend is going up.
Yeah. So right
on
now,
this one,
yeah, no.
Yeah, no. You can kind of see that like it's been going kind of down. So that doesn't check that box. Earnings announcement dates. That's an important one because every quarter a company will report their earnings, and there's always projections about what it's going to be, and it's almost always not what they project it to be. It could be better or it could be worse, but